is the truckload brokerage off the ground?
Well, one of the early challenges are that you don't have enough experience and enough lanes to be competitive. I remember we would get a chance to quote on a truckload shipment.
Mm.
In the early days, you wouldn't know the price. So you'd have to call some carriers, and then put a markup on it and quote it back to the shipper. By then, they might have already found a truck, or they would tell you C.H. Robinson's $200 cheaper, and
Right.
think, well, how do they do that? Because we can't even buy a truck for that. So there was a lot of bootstrapping your way to scale so that you had enough density and enough lanes where you had a Rolodex full of carriers that had backhauls and could give you a below market price where you could make a little money. When we would buy a small LTL broker in 2010, we would tell them, look, we want you to keep selling LTL, but we also want you to sell truckload, and we're going to teach you how to do it. We want you to sell managed transportation and get contracts, long-term contracts. We'll tell you how to do that. We have the technology to do it. So we would take these small little acquisitions and double or triple their revenue in a couple of years, simply because we were giving them more to sell and they already had a book of relationships.
Welcome to the Freight Show podcast. Today, we're joined by Doug Waggoner, Chairman and CEO of Echo Global Logistics, to unpack one of the most remarkable careers in modern freight. Doug takes us back to the early days of deregulation, when tariffs were fixed, deals were done over three-martini lunches, and pagers were cutting-edge tech. He shares how those early lessons shaped his leadership at Echo, and what it took to build one of the largest multimodal brokerages in North America. We explore the company's origin story, from bootstrapping to IPO to going private, and the challenges of integrating 30 acquisitions while keeping culture intact. Doug also shares his perspective on AI's role in logistics, why it's a task killer, not a job killer, and how technology is reshaping productivity across the freight industry. All right, let's dive in. This episode is brought to you by Vooma, the back-office automation platform built for freight brokerages and 3PLs. From AI-powered document handling to streamlined workflows, Vooma helps logistics teams move faster and scale smarter. Learn more at vooma.com.
Welcome, everyone, to another episode of The Freight Show. I've been really looking forward to and excited. We've got Doug Waggoner on, Chairman and CEO, Doug, is that right, of Echo? Thank you so much for joining. It's great to have you.
Well, thanks for having me, Jesse. Good to be here.
Doug, you have been in the logistics industry for a long time. And as I understand it, when you started your career in logistics, this was really just kind of post deregulation. Is that right?
That's right.
And I would love to understand what did things look like back then? I mean, you were sort of like right on the tail end of it, but take me through that transition, what it felt like in that moment, the opportunities that created, how sort of brokerage emerged, as I understand it, in that era there. But I'd love to hear it from someone who kind of lived through that period firsthand.
Sure. Well, when I graduated from college, I joined a management training program for a trucking company called McLean Trucking Company, named after Malcolm McLean, who was the inventor of ocean containers.
The ocean container, right? Oh, interesting. Okay, cool.
He was no longer involved in the LTL company, but at the time, McLean was the fourth largest LTL carrier. And I started off in sales, but I went through a 6-month training program, which started out by driving a truck. They wanted you to understand what the truck driver's life was like. And then you got to be involved with every aspect of the business, working in small terminals, working in large terminals, working on the dock, supervising dock workers and drivers, working in the corporate office. So it was really a great education for a kid right out of college wanting to learn the industry. And you're right, it was a different time in many respects, starting with deregulation. The industry had just deregulated in 1980. And in those days, prices were set by the ICC, the Interstate Commerce Commission. And so transportation companies just basically charged whatever the tariff rate was. And there was no negotiation. And salespeople were really just relationship people that would entertain a lot. I remember going out with sales rep that I was training with, and he was an
Mm,
old timer. In fact, most of the sales reps in those days were middle aged white men,
mm,
had three-martini lunches. Um, so I would go out with him and make calls, and customer would ask, what's the price, and the sales rep would respond, well, I don't know, it's all regulated. The price is the price,
interesting.
and you would only sell your service. And so that was really interesting. And so we had just deregulated, and the industry was really trying to learn how to compete on price because it had never had to. And so in the beginning, you would see, discounts, like 10% discounts off the tariff price, and they would be tied to, give us more than 3 shipments and we'll give you a 10% discount.
Mm,
So those were the early days of competition,
mhm,
it got much more sophisticated, much more competitive from there. In fact,
mm,
in the 80s, there were a lot of LTL carriers that failed,
mm,
oftentimes because they had unionized labor with the Teamsters, and they
mm,
couldn't compete with the newer non-union carriers that were starting up. And so,
mm,
if you look over the last 50 years, I mean, there's been dozens and dozens of LTL carrier bankruptcies.
yeah.
And once they go bankrupt, they never come back because they lose all their freight the following day.
Mm,
But the other way that it was different back then, and this will be probably difficult for your audience to imagine, but the technology of those times was ridiculously premature.
yeah,
We didn't have cell phones, right? So as a
yeah.
salesperson, I would go to the bank and get rolls of quarters, put them in my ashtray, and while I was out making sales calls, I would have to call a customer or call the office. I would literally
Mm,
drive to a phone booth and get some quarters out of my tray and put them in the phone and make a call. And
right.
then we got a big technology advancement. It was called pagers.
Yeah.
So we'd, my office would say, have a customer that wanted to talk to me. They would page me, and then I would
Mm,
call the office, get the customer, the information and maybe the customer's number, and then call them back from a phone booth. Um, Likewise, we didn't have email in those days.
yeah.
So when you communicated, even intra-company communications, if I wanted to communicate with another office, I would type out a memo on a piece of paper, put it
Mm,
in an envelope, and stick it in what we called the truck mail, and we had
mm,
our own mail system where, paper would move between terminals in a mail bag, and that's
yeah.
how we communicated.
Wow. And with I hear a lot about the sort of LTL carriers of the time. Were there sort of long haul, over the road, full truckload carriers? Was that a different segment of the market at that time, or what did that sort of look like for the long haul full
Yeah, you
truckload
had
stuff?
distinctive, carriers that were, more prone towards long haul freight, and then
Hmm.
those that were more prone towards regional freight or even local freight. So sort of 3 classifications of LTL carriers. In those days, the big long haul carriers were Yellow, Consolidated Freightways, Roadway, PIE. There was probably a dozen of them,
Mm,
ironically, all of which are no longer around.
yeah.
Um, and then you had, regional players that had a network to serve a regional part of the country.
Yeah. Interesting. And so the deregulation then caused, I guess like new competitors to emerge that didn't have unionized labor forces, were able to sort of compete, get to a lower cost structure. So it caused bankruptcies in the LTL side for some. Like, take me through that sort of market evolution, and then I imagine, as I understand it, something similar happened on the sort of full truckload side as well, and that was kind of the era where folks like JB Hunt were sort of coming up and others, right?
Right. Well, I think, alongside of all this came technology, right? The
Yeah.
personal computer, for instance, allowed us to, connect to the system and optimize our business, run our networks and our terminals better. I remember being at Yellow in the 90s, and we hired a company called Princeton Consulting, which had a
Mm,
tool called SuperSpan, which was a very sophisticated mathematical formula that allowed
mm,
us to optimize our line haul network and
mm,
decide, where to domicile drivers and trucks
mm,
relative to the balance of our network. So
mm,
during my career, I saw it go from sort of a backwoods good old boy industry
mm,
to, an industry that started hiring more and more college graduates who
mm,
started implementing technology, who started
Mm,
implementing mathematics and optimization.
mm,
Me, and I was an econ major, so I did a lot of econometrics and
mm,
mathematics. It was really gratifying for me to see the industry mature
mm.
as time has gone on.
Yeah. Yeah, that I mean, it seems like a theme of your career where you've been in the industry for a long time, have seen it, but have always had this sort of tech forward orientation throughout it. And tell me about how sort of the beginnings of brokerage, because as I understand pre-deregulation, it wasn't actually even you weren't it was you couldn't have sort of an MC that didn't have assets associated with it, right? And it was almost not possible to for that industry to exist. And then how did that sort of what was the early days of
Yeah, I'm not
that?
intimate on the beginnings of brokerage.
Yeah.
My perspective was, I knew somebody that went to work for a company called Hub City Terminals, which is now, I think morphed into the Hub Group, but it was
Oh,
sort of a
interesting.
franchise model where people were doing truckload brokerage sort of on an agent basis.
Okay.
I think another big turning point was when Paul Loeb created the company American Backhaulers.
Right. Yeah.
And Paul had a concept of, finding where a truckload carrier ran empty,
Mm,
either backhauls,
yeah.
and find capacity to fill that backhaul
Mm,
and create a win-win situation for both the shipper and the carrier.
mm.
And
Yeah,
then,
it's an
and of
interest
course,
yeah.
you know, American Backhaulers was sold to C.H. Robinson, and I think that
Yep.
was a catalyst for C.H. Robinson to really scale and grow that business. And then, after that, there were lots of copycats.
What was CH's primary business prior to the American Backhaulers
Well,
acquisition?
they had a brokerage business, and I'm probably
Yeah.
not the expert on their history,
Yeah.
but know
Yeah.
that their legacy was that they were a produce broker.
Okay. And then
And
yeah.
and
Uh,
and so, they had somewhat of integration with the transportation and the produce brokering where they could, sell the produce and then have a way to move it from the farmers to the stores.
yeah, interesting. And fast forwarding a little bit to so the founding of Echo, and I'm curious to sort of hear because as I understand it, you had shifted out and we're actually in the sort of freight tech ecosystem, I think, for a period of time before then jumping in with Echo. But I'm curious to hear the origin story of Echo as I understand it. Like initially it wasn't necessarily full truckload, right? But it sort of had its origins in partials, if I'm not mistaken. But I'd love to, yeah, like hear that story.
Right. So I left the LTL industry in 2005 because I wanted to start a SaaS TMS business.
Yeah.
And so I had a partner and we started writing code early in 2005 and, had an MVP product by, the end of the year, and we're starting to market it and bring on customers.
Yeah.
While that was happening, the two founders of Echo, Brad Keywell and Eric Lefkowski,
Yeah.
had the vision to start Echo. And Brad and Eric were serial entrepreneurs. They
Yeah.
started a number of companies, and they started a company right before Echo called Inner Workings.
Mm,
Inner Workings business model was that they would deal with printers, commercial printers, and find
mm,
out those that had surplus capacity.
mm,
Then they would sell that capacity to people that needed to do printing. So
mm,
effectively, they were brokering printing.
mm,
And as the story goes, they were, oftentimes they might have a particular job to print for, let's say, Microsoft,
mm,
and the right type of printer and equipment happened to be with a printer down in Atlanta, Georgia, and
mm.
could print on the substrate that was required. And so they would broker that print job, but then they would have to ship it from Atlanta to Seattle. So
Interesting.
so Inner Workings became a shipper, and as such, they were using C.H. Robinson to move a lot of their freight. One day
Interesting.
they got to tour the C.H. Robinson facility, and they said, "Wow, they're doing what we do. They're doing it with freight, and we do it with print. Maybe
Yeah.
we should start a business like this because it's such a huge industry." And they didn't know anything about transportation.
Mm,
And part of their model at Inner Workings was to essentially be an outsourced provider of print. So they would cozy up with a company and work with the marketing department. And whenever something needed to be printed, they would they would, handle it for them. And they called that an enterprise customer.
Mm,
So when they started Echo, their idea was we're going to go out and find customers and become their transportation department. So it
mm,
started out to be a broker. We started out to be
mm,
outsourced transportation.
okay.
And one of the two founders, Brad, is a great salesman, and he went out and found some big customers right off the bat.
Mm,
So Echo got its start as a outsourced transportation management partner,
mhm,
for half a dozen shippers.
okay.
About that time, they were introduced to me as somebody that came from the industry and was tech savvy. And, their intention all along was to, create some prototype technology, test the concept, and then bring in
Mm,
an industry executive to run it.
mm,
So that's where I came in. So I joined Brad and Eric in the first year.
yeah,
News were about $6 million. I think we had 35 employees.
wow.
And then once I got there, we initially started doing LTL brokerage. So we had the managed transportation business, which was the core. Uh,
Yeah,
Having come from LTL, I knew all of the CEOs in the industry. And so I went out on a roadshow and started trying to convince the LTL carriers why they ought to let Echo resell their capacity. And in those days, LTL carriers did not like brokers. They did not want a third party coming in between them and their customers.
mm,
So my job was to convince them that we're going to be a reliable partner. We're going to be
mm,
trustworthy. We're going to be fair. It's not all about price. We're going to add value, and we're going to call on small SMB customers
mm,
that you probably can't afford to call on, Mr. Carrier,
mm,
because you've got sales reps driving around in Tauruses, managing a sales territory, calling on big shippers. They don't have time for the little guys.
mm,
And so, the idea was we will take those customers, we'll aggregate a lot of them, we'll
mm,
provide the sales, we'll provide the customer service, we'll provide the technology, and all you have to do is provide us with the capacity.
mm,
And so, in a time when carriers really didn't want to deal with brokers, we got them to deal with us.
mm,
At the same time, Robinson had been successful as an LTL broker.
mm,
I think a big reason why they were so successful is that their person that ran LTL in those days had a very good relationship with the carriers. And I know that because I had worked with him as a carrier.
mm,
And he was very fair. In those days, you had a lot of these small brokers that would sort of, maybe they were a former LTL sales rep and they wanted to start their own business and leverage their
mm,
relationships. But a lot of them acted kind of shady. They would misdescribe freight. They would use the wrong weight. They would sort of game the system to make some money and to make a
mhm.
spread.
Yeah, interesting.
Meanwhile, you had C.H. Robinson, which was very reputable, treated the
Mm,
carriers very fair. So
mm,
when I went out on my roadshow to recruit carriers, I basically said, "We're going to do what C.H. Robinson does. We're going to be
mm,
upstanding partners, and we're going
mm,
to be fair, and it's not all about price."
mm,
So we got a number of the carriers to agree to it, and they gave
mm,
us essentially wholesale pricing,
mhm,
and we started hiring people and selling. And in the early days, we would hire 12 salespeople and, within a few months they'd be paying for themselves. So we'd hire
mm,
12 more and we'd hire 12 more. And
mm,
that just began, this cycle that we created, kind of a flywheel effect.
yeah,
And by 2009, our revenue was about $260 million.
wow.
And
Wow, so that from very little, like, if you said 6 in, like,
yeah.
2006. Wow, okay.
And plus we never, aside from, we got an early investment from NEA, which is a venture capital firm. They
I
gave
saw that, yeah, super interesting. I mean, they're obviously still, yeah, big venture investor today.
Well, they gave us $7 million. That was all the capital we raised. And that was enough. We were profitable from then on. And we actually started doing M&A in 2007. We bought our first company. And we continued to grow until 2009. We did our IPO and we raised $80 million in the IPO. So that was the second time we raised capital.
Wow.
And by the time we paid the bankers and the fees and we paid off a little debt that we had about 50 million in cash left over. And
Mm,
so based on that little war chest, we started doing more M&A. And, fast forward today, we've done about 30 acquisitions.
and what is,
And then
yeah,
also, and then just to
yeah,
round
no,
out the story, in 2009, at the time we were going public, we were also trying to figure out how to be a truckload broker, because at that point in time, we had our managed transportation business where we would
mhm,
sign 3-year contracts and take over the transportation function for shippers. We had our LTL brokerage, but in those days, the LTL market was maybe a $40 billion market, while
Mm,
truckload was 400 billion.
mm,
So our next initiative was to figure out how to be a truckload broker, and we tried and failed, and we would hire
mm,
people that had done it, and it wasn't until we really zeroed in on our own approach and processes and worked
mm,
with those and built technology around it that we started to have some success. And then the next phase is you got to get to scale to be competitive.
mm. Yeah, so what was hard? Like, it sounds like took a few cycles to start to figure it out. What were the challenges in getting the truckload brokerage off the ground?
Well, one of the early challenges are that you don't have enough experience and enough lanes to be competitive. I
Mm,
remember we would get a chance to quote on a truckload shipment,
mm,
and we'd give the customer a price. Well, in the early days, you wouldn't know the price, so you'd have to call some carriers, find a
yeah,
price, and
yeah,
then put a markup on it and quote it back to the shipper. Well, by then they might have already found a truck,
right,
or they would tell you, well, C.H. Robinson's, $200 cheaper, and
right.
think, well, how do they do that? Because we can't even buy a truck for that. So,
Mm,
so there was a lot of sort of bootstrapping your way to scale so that you had enough density and enough lanes where
mm,
you had a Rolodex full of carriers that had backhauls and could give you a below market price where you could make a little money.
mm,
And then so we kind of bootstrapped that up to about, I think in 2015 our total revenue was about 1.2 billion, or maybe 2015 I guess it was. We were 1.2 billion. Half of our 1.2 billion of revenue was truckloads. We had $600 million of
oh,
truckload
wow,
business, and that's when we did the acquisition of Command, and they were a $600 million truckload broker.
yeah,
So 2015, 16 timeframe, we essentially doubled our truckload brokerage business,
mm,
which then gave us the scale to be competitive with pretty much anybody in the industry. Because
mm,
the more loads you're moving in a lane, the more carriers that in that lane that could potentially move it, and the more options you have to find a good price.
mm. So that's really the sort of the density flywheel that you can start to get turning,
Yep.
right? Like, you've got more freight, you attract more carriers, you've got more available options that
And
are
then at the
willing to
same
move.
time, you're building technology alongside to make you more efficient,
Mm,
capture, price data so that you can do price discovery.
mm,
Eventually you get to the place where you don't have to call to find out what the price is. You know what the price is in a lane on
yeah,
that day. You understand the seasonality,
mm,
understand how the prices fluctuate by weeks. But in 2014, we created a data science department, started creating our own algorithms to predict
mm.
price, and that was an important part of our evolution.
Yeah, what was that moment like? Was that did that transition happen only for the large players? I mean, it's interesting now. Pretty much everyone in the industry has to. You've got to quote so quickly, right? That if you're waiting around to like actually get a rate from a specific carrier, then you're going to be too slow. At what point did that start to transition where that was almost like the default for the industry that was required to win, or was that only for folks like yourselves that had really gotten to scale that could achieve that?
I think the first thing was people that had scale and the inclination to use a little mathematics could start to create pricing algorithms.
Yeah.
But in the meantime, other companies came along like DAT and Freight Waves with Sonar, who started to supply industry data. So
Mm,
today anybody can get their hands on that data without a lot of technology or
mm,
analytics. It's available to buy, but that's been an evolution.
yeah. Very, very different. So you guys built you got the brokerage to 600 million. So it sounds like took a little bit of time, but you guys are really starting to get that flywheel turning organically before then doing the Command acquisition. And they were based in Chicago as well,
Yeah,
correct?
they're right down the street.
Yeah. And what have you what has been your philosophy around M&A? How have you sort of thought about it? Like, where businesses fit in, how you sort of think about evaluating what makes sense for you guys?
Well, in the early days, when I say early days, I'm talking, 2005 through 2016, maybe. We were buying small brokers that would basically bring a book of business with them and give
Mhm,
us density, maybe give us a geographical presence.
mhm,
Even though most of our salespeople can sell anywhere, they tend to want to sell in the area that they know, which is some radius around where they live.
mm,
We found that to be true, but we would buy these brokers. They might be an LTL broker, which was fine because we had
mm,
LTL brokerage, or they might be a truckload broker, which is better because we were trying to build our truckload brokerage.
mm,
We got a lot of talent that way.
mm,
Part of us sort of developing our own approach to truckload was
mm,
hiring experienced truckload brokers that
mm,
successfully built a company. So we
mm,
learned a lot from them. Um, and so the economics were good because we would buy them at a multiple, and as a public company we would trade at a higher multiple, so there was some arbitrage there.
mm,
Um, the other thing that we were pretty good at is buying these smaller brokers and putting them on our technology and
mm,
teaching them how to sell the other things that we sold, because our
mm,
strategy from the beginning was to be a multimodal broker. So we
mhm,
had less than truckload, we have full truckload, we have
mm,
partial truckload, we have intermodal, and we have managed transportation.
mm,
Today we have even more, which is part of our latter M&A strategy. But when we
mm,
would buy a small LTL broker in 2010, we would tell them, look, we want you to keep selling LTL, but we also want you to sell truckload, and we're going to teach you
mm,
how to do it. We want
mm,
you to sell managed transportation and get contracts, long-term contracts. We'll tell you how to do that. We have
mm,
the technology to do it. So we would take these small little acquisitions and double or triple their revenue in a couple of years,
mm,
simply because we were giving them more to sell and they already had,
mm.
a book of relationships.
Yeah, I can imagine that playbook being very accretive, right? I mean, the sort of starting point is you get multiple arbitrage, but then you guys give them a bunch of other modes. You can organically increase revenue. You give them a technology stack that either allows them to support that volume, I guess, without necessarily having to grow
Yeah, and
the
it's funny
domain
because
yourself.
in those
Yeah,
days we were public, and I would meet with investors, and we would talk about all of our acquisitions, and they'd say, "Oh, you're a roll up," and I'd say, "Well, not really, because most
yeah,
of our growth is actually organic.
right.
Yes, we've bought a number of companies, but if you look at the revenue from those companies, they're
Mm,
massive, 2, 3x growth, and I classify that as organic."
yeah, yeah, yeah. It's more that I mean, I think the roll up is traditionally associated with I'll put everyone on a common kind of back end, and a lot of it's multiple arbitrage and selling it to somebody. But it sounds like, and that was going to be one of my other questions. Is I'm curious, um, the multimodality of your offerings has been sort of a core piece, and I'm curious to understand more about the value of that and how you sort of think about what offerings you bring in, and is there a tension between sort of focus and breadth, and what sort of role do each of those play when you do it right?
Well, I think, first, from a financial perspective, it's diversification, right? So if you look at
Yeah.
the cyclicality of the truckload freight market, we tend to weather those cycles better than most because,
Mm,
a third of our EBITDA comes from truckload brokerage, a third comes from LTL brokerage, and a third
mm,
comes from managed transportation.
mm,
So, we take some of the volatility
mm,
away that the market gives us. Now, the
mm,
flip side is it's hard to do it. And the reason it's
mm,
hard is because you got to train people to be multimodal.
mm,
Most salespeople that sell, only truckload, I mean, they understand truckload, they understand how the freight moves, they
mm,
understand the pricing, they understand the lingo.
mm,
LTL has an entirely different lingo and an
mm,
entirely different pricing construct, and the freight
mm,
physically moves differently. And the LTL carriers are different than dealing with truckload carriers.
mm,
So when we first set out to be, quote, multimodal in our sales organization,
mm,
the question was, okay, do we have an LTL team and a truckload team and an
mm,
intermodal team, and a managed trans team? So we have different teams that do
mm,
the thing, or do we try to teach everybody to do everything?
mm,
And I remember we started off, we had an LTL sales team and a truckload sales team, and
mm,
we did some customer surveys, and we surveyed our LTL customers, and we found out that, well, 80% of them have truckload, but our
mm,
LTL sales reps don't know how to sell truckload. And
Mm,
when we survey our truckload customers, we found out that 80% of them have LTL, but our truckload salespeople don't know how to sell LTL.
interesting.
So the decision we made was, let's train our salespeople to do both, and it's hard,
Mm,
but if you've got good training
mm.
and you've got good reinforcement and you've got the right compensation system, you can sort of guide people to do that. So that's been our strategy.
And so that is the case today. And then depending on the shipper and their freight mix, they may have sort of more of one or the other, but the
Yeah,
reps
and
are, yeah,
you have salespeople that tend to drift one direction or the other based on where
yeah,
they've had success and what they feel the most comfortable with. But our desire as the company is to encourage them to sell everything that they can.
yeah, yeah, that makes sense. And start to kind of own more share of wallet. And what about the relationship between the managed trans business and the sort of more brokerage offerings? Is that about diversification, or is there sort of some like reinforcing feedback loop between those?
Well, managed trans is a really a separate offering.
Yeah.
The way that we sell that is we pitch it to a customer. We basically do an analysis of their freight spend. We look at all the modes. We may or may not bring in our engineers, our industrial engineers, to
Mm,
craft a solution specific for them, depending on where their distribution centers are and where their warehouses and where does their inbound come from and where are their customers. And, so there's a strategy that goes into that. But, once we've done our diligence, we craft what we believe is a solution that will save them money and give them better
mm,
service to their customers. And we pitch it. And, typically, that solution will include dedicated resources. So they'll have a team of Echo people.
mhm,
Depending on their volume, it could be a 6-person team that only works for them, or it could be a
mhm,
half of a person.
mhm,
Simultaneously, we'll do some technology integration. So we'll integrate our proprietary TMS with their ERP system
mhm,
so that while they're, you know, creating orders in their system
mm,
and they're, creating pit transactions out of their warehouse, it's queuing
mm,
on our system as transportation that needs to be executed.
mm,
And then we become their transportation department. And
mhm,
then um, every quarter we sit down and do a QBR and we give them updates about the state of the industry and the state of the market and what are the
mm,
market conditions, how we're performing, how the carriers we've selected are performing, how much
mhm,
money we've saved them, and
mm,
we do that every quarter, and it's very very open and transparent. And as a result of that, we typically have 3-year contracts, but we have a
mm.
96% renewal rate when those contracts come up. I
Well,
think that's a
yeah.
testament to the level of service that we provide and the savings that we provide. Now, for those customers that have truckload business,
Mm,
um, we're really acting almost like a 4PL, right? So we might give freight to our competitors because
mm,
we ran a sourcing process and they won a lane, and that's what the customer needs.
mm,
Uh, Now, whether the Echo brokerage can participate or not, that's sort of up to that customer whether they want us to or not. Some want a wall between
mm.
managed transportation business and our brokerage, and others say, no, if you can find a good deal, we'll take it.
Interesting. Yeah, I was gonna ask, does having both business lines, does it help you? Does it harm you? Is it seen to be a conflict? Is it largely the pitch that helps us, like we bring a lot of expertise to the table because we move a ton of freight, or are there situations where it's beneficial for you in in the sale where someone says, we love that you have that, and like, is there some sort of interaction between those two business lines?
Well, yeah, we love the managed transportation business because it's very sticky, right?
Yeah.
And clearly there's a relationship component, but there's also a track record, and we've proven that we can execute and
Mm,
add value. And you find a lot of times, especially in the mid market and the SMB space, companies haven't made big investments in their transportation function,
mm,
so they may not have the resources or the expertise or the technology
mm,
um, to do what we do, and they certainly can't buy as well as we buy.
mm,
So when we meet with an SMB or mid-sized company,
mm,
I think it's pretty clear to them that we can do transportation better than they can.
Mm,
and even when we're making a small profit on it. So that's sort of the pitch, and it's been very successful. We've got
mm,
over 300 customers today that
wow.
have signed long-term contracts, and
Yeah.
that number grows every quarter.
Do you have a perspective on what is managed transportation as the way that a shipper solves their logistics function? Is that like increasing in share? Is it stable? Is it decline? Like, what are the sort of dynamics there from a shipper perspective of how they sort of think about that offering?
It's certainly every shipper is unique and
Yeah.
have their own philosophies about, when to outsource something and when not to.
Mm,
Mm. Some shippers will run an RFP process, and they'll
mm,
ask us to, submit a proposal along with some of our competitors, and they'll pick a winner.
mm,
In other cases, we identify companies in our brokerage that we think are good candidates
mm,
for managed transportation. And in that case, we will approach them and say, "Hey, look, we work with you today on a transactional basis, and we get some percentage of your freight.
mm,
Well, we'd like to propose a solution where we get 100% of your freight, but it's
mm,
a more intimate relationship and a higher value
mm,
relationship for both of us."
mm. What would make somebody a good candidate for that conversation? What are you looking for? What are the signals?
I think when they have, a moderate volume of freight, but maybe some level of complexity.
Mm,
So by complexity, I'm thinking that maybe they have multiple origin points.
mhm,
They're trying to serve the geographical
mm,
the country, and it's not economical to do it from one location. So they might
mm,
have a couple of warehouses. Maybe they manufacture
mm,
different products in different plants. Maybe they've got a mix of LTL and truckload.
mm,
Maybe they've got some freight that could move intermodal, but they don't really know much about how to do intermodal.
mm,
Um, and then maybe they've got high volumes of LTL, and we believe that with our analytics and our optimization capabilities, we can combine LTLs into truckload and save them a lot of money.
mm.
So it's just, those types of things would be signals that we might be able to help somebody create a managed transportation relationship.
Yeah, it's interesting. So, like, some amount of sort of complexity where your understanding of how all the pieces kind of come together, um, adds that. And are they typically they have an internal team that is managing that today, and or are you pitching them? Are they switching vendors predominantly? Like, is it what does
It's
that look
both.
like?
It's
Yeah.
both, but I would say that maybe the funny story is, you know, when we've pitched this to a small company, maybe we're talking to the president of the company or the
Mm,
chief operating officer or um, and of course they'll quickly delegate us to the transportation manager. And
right.
there was a time when the transportation manager might feel
Mm,
insecure about us coming in to do his job or her
right.
job. Um, what they would typically find is that their job is just fine. In fact, what they're going to gain out of this relationship is a team at Echo that works for them.
Mm,
So I can remember instances where we were pitching to the executives when the transportation people got pulled in, they were sort of
mm,
naysayers, but once they realized we were working for them, they became
mm,
biggest allies because we broadened their capabilities, in their company.
mm. Yeah, very interesting. I imagine there's some sensitivity there, but if you do it right, that there's you can
I can't think of one time that somebody lost their job because we came in as a
yeah,
transportation partner.
yeah, yeah. Very interesting. Um, Doug, I was curious to understand you've done sounds like 30 acquisitions, and integrating those businesses successfully is not an easy fit. I mean, there's all these sort of memes around like, most M&A like erodes value, etc. Obviously not true. There's a bunch of counter examples, but there are a lot of ways for it to go wrong. And I'm curious to learn like some of the hard-earned learnings for you about like situations where things have gone really well, maybe situations that they haven't, and what you've sort of learned about doing M&A and integration successfully.
Sure. Well, in a typical Echo acquisition, we would be buying, let's say, a small broker
Hmm.
with a founder or founders. Um, they have their own culture. We have ours. We want to put them on our technology. That's always a challenge because no matter how good or bad your technology is, when you are forced as an employee to use a new technology, you're not going to like it. Even if it's better, you're not going to like it. So there's a learning curve and a change
Mm,
management process that you have to go through. So we work through that. We have a very good training department. We have a team that helps bring
mm,
them onto our technology,
mm,
and we work really hard to sort of adapt them into our culture, and
mm,
we make it fun, and we want it to be a culture they want to be part of, and
mm,
try to do that right. But the other part of it is you've got owners
mm.
who now have to become employees. And
Yeah.
it's very hard, as you can imagine, psychologically to go from
Mm,
being an owner to an employee.
mm,
And we're aware of that, so we manage them with a light touch. We
mm,
encourage them to remain entrepreneurial.
mm,
And our ask is sort of like, you know, be open-minded, try to lead your team to join the
mm,
Echo culture and be part of Echo and take on that identity.
mm,
And at the same time, we're going to sort of respect your autonomy.
mm.
And, we know we're going to bring a level of bureaucracy that you're not used to. Uh,
Yeah.
but let's just work together to get through it, so it's sort of an open and honest approach where with
Mm,
mutual respect.
mm,
And we've had really good success with that. And in fact, a lot of our early acquisitions where we had an earnout feature to the deal, um, our owners have stayed on well beyond the end of their earnout
mm,
as employees, and when we bought brokers, we would typically make them into an Echo branch. So they sort of retain their geographic
mm,
location and identity. And, they're still together as a team. And we try to make Echo a place that they want to be part of,
mm.
and it's worked pretty good.
Yeah, in my prior life, I was, CEO of logistics technology businesses, but similarly, we were typically buying them from founders, and it was one of the things that required the most, like, intention, really, was sort of managing the founder dynamics, especially, I mean, I imagine it's maybe even more acute in logistics where the relationships that those folks have built with their shippers is really critical. And so I imagine the default is that you really do need them like staying on and engaged um, and supporting through that transition. How do you guys think about that from your perspective? Like who sort of owns that integration challenge or even the mapping? Is it sort of them becoming just, a regional division, or is there like a dedicated team that is sort of focused to it? How do you sort of structure that from your perspective to make sure you guys get the outcomes you want?
Well, that owner is still going to be the boss of their branch, right? But we asked them to engage with our integration team and get their employees engaged with our integration team, to make it a successful transition.
Mm,
And they've just had a payday. They're feeling good about things. I would say there's a honeymoon period for a while where they're all gung ho, and then after a few months, maybe the reality of you know Echo's a little more bureaucratic than what we're used to, and I'm not used for to have to ask for permission to do something. So
yeah.
there is that reality that sets in, and you've got to kind of work through that. But we've done it a number of times. I think we understand the sort of the human dynamics, and we just work hard to get them through it.
Yeah, that's interesting. When we were doing acquisitions, there were learnings about what was really important to integrate very quickly versus what was, important to take some time on. And in a lot of situations, getting just the financial systems, migrated, getting the CRM migrated so that things kind of came across quickly and you could actually get visibility into what was going on was a really important first, almost sort of non-negotiable step. But then there were different decisions that were sometimes made about what is the brand? Like, do you continue to maintain the brand of that business? Does it always kind of come under the Echo shop? What does kind of leadership look like? What do you sort of enable them to like retain decision-making autonomy over versus not? And I'm curious if your perspective on that has sort of changed or evolved over the years in terms of like what works, and is your playbook always the same there, or are there circumstances where there's like nuance?
Yeah, it's In the beginning, we always wanted to put them on our technology and generally did.
Yeah.
I'd say that's still our bias, but there are times when, you look at the specifics of the company and it's part of making the decision whether or not to do the deal in the first place.
Right.
Um, do we want to keep them on their system or put them on ours? And there's
Mm,
reasons why you might leave them on their system. Let's say it's a managed transportation business that's deeply integrated with their customers.
mhm,
Well, to rip out those integrations and integrate them with our system is going to be painful for those customers. So we
mm,
probably wouldn't do that, at least not in the short term. We would just
mm,
take over management of their system, keep their customers on it.
mm,
And over time, as we can transition customers to our system, we would. In a brokerage business, our desire would generally be to put them on our system pretty quickly, and we have a process for doing that, which, there's both an IT and a data aspect of that, and there's also an employee training aspect of that.
mm,
But, as far as the branding goes, generally we want them to be on the Echo brand, but there have been times where because of their brand identity in their space, we've left it alone. Example of that would be a company called Roadtex that we bought a few
mm,
years ago, and
mm,
Roadtex was a little bit different business. That was one of these acquisitions that sort of broadened our capabilities.
mm,
Roadtex is a non-asset temperature controlled LTL carrier,
mm,
and they also have warehousing, and they do retail consolidation for big box retailers.
mm,
So based on that customer base and
mm,
based on their sort of brand identity in that space, we've left their identity as Roadtex, an Echo company.
mhm,
And so, now will we migrate it to Echo? Maybe someday, but there's no hurry. We're still getting the
mm.
financial benefits of the deal, and they have name recognition with their customers.
Very interesting. Um, Doug, I'm curious. I mean, your journey as sort of like leader of Echo, I mean, pretty incredible one in that, joined from the very early days, took the company public, then sort of took the company private. I'm curious to understand, now having sort of run like a public company, run a private company, what are your reflections on, what you like, dislike, what the sort of benefits and trade-offs are having done both?
Well, when we did our IPO in 2009, in retrospect, we were too small to be a public company
Mm.
at that
I was
time.
going to say it was that is quite early, I would imagine. Yeah.
Yeah, yeah. But our founders were tech entrepreneurs, so
Mm,
they didn't really, I think, appreciate how big transportation companies tend to be that are public companies. So,
mm,
and in fact, when we first started our IPO, work and meeting with analysts and investors, our whole story was about technology. Our
mm,
pitch was, hey, we're a tech company. We just happen to make money with freight.
mm,
What happened was, as we were preparing for the IPO roadshow, we would meet with the sell side analysts, and we'd be giving them our pitch, and they'd be sitting there and they say, "What's LTL again?" And we'd say, "Okay," and then we'd explain it, and they'd say, "Do you mind if I bring in my transport analyst?" And we'd say, "Sure, go ahead." Well, the transportation analyst would come in, and we'd to tell our story, and the transportation analyst would say, "Hey, I got this. This is something I know."
mm,
So we sort of went from pitching our story as a tech story to getting sort of pushed into the transportation domain, which is, fair because that's what we do. But
mm,
it's always been tech enabled and data science enabled. And
mm,
so it was fun to go through the IPO process. We were probably too small. It hurt our valuation. We generally traded at a discount because we were too small to be a public company.
mhm,
And the story there would be, I remember meeting once with Fidelity, and they said to me, I love your story. I like the management team. I'd really like to buy your stock, but I can't. And I said, well, why? And they said, well, you're too small, because the size positions that we need to take,
mm.
we're going to move the price of your stock. If we're getting in, the
Interesting.
price is going to go up. And if we're getting out, which is worse, the price is going to go down.
Mm,
And we just, can't do that until you've got a larger market cap and more daily trading volume.
mm,
So anyway, bottom line was it was fun to be a public company for a while. It got old,
mhm,
and living quarter to quarter and sweating out every, 1 or 2 cents of earnings per share is
yeah,
stressful. And going on those quarterly earnings calls, and especially if you didn't meet expectations, is a lot of pressure. but it was also fun, from a selfish standpoint. It was a fun to put that notch in my belt, uh,
Yeah.
and learn the process. I've always, been a sort of an investor as a hobbyist. So
Mm,
it's fun for me to learn the inner workings of Wall Street and how it all kind of fits together and how it works. But after doing it for 11 years, I was getting frustrated that I didn't think we were being valued correctly. I would look at my
mhm,
peer group and we were trading at a discount, even though at that
mm.
time we had beat consensus estimates 9 quarters in a row,
Wow.
still trading at a discount. So when I got the call from the Jordan company, our private equity partner said, would you consider going private? I said, well, make an offer, and the rest is history. Now that we've been private, and it's my first time working with private equity, I've really
Mm,
enjoyed it.
mm,
I don't live quarter to quarter anymore. We can think more longer term. We can
mm,
make investments and not worry about what it's going to do to next quarter's
mm,
EPS.
mm.
And I've got a partner that's really good. They understand the industry. They've owned other assets in the space, and they've been great to work with. So I guess I've been blessed to have the best of both worlds and
Mm.
all of those experiences, and I'm having a lot of fun with how we're doing it right now.
Yeah, that's awesome. I mean, and it sounds like, yeah, you're getting this sort of a bit of breathing room to kind of execute the strategy and think a little bit longer term. It's interesting. I didn't quite appreciate that one of the challenges of being too small as a public company was the fact that you really couldn't get demand or the right sort of demand from these big buyers because of the liquidity issue. But that actually makes a ton of sense. Um,
Yeah, and then I would talk to investors, whether it would be big funds or hedge funds, and say, well, how big do we have to be to get a better valuation, based on how the
mm,
market trades. And they said, well, kind of the rule of thumb is $1 billion market cap. And we were kind of in the 850 to 900, towards the end there. Sometimes we would pop over a billion. So we were getting close,
yeah,
although I think that number's moved up in the
yeah,
last 2 years. So I think, there's a lot of demand for transport, public equity. It's a,
mm,
it's a big sector of our economy. It's,
mm,
it's sort of a proxy for how the economy is doing. So I think there are lots of, and if you look at Dow theory says that transports lead the market. So
mm.
I think there is,
What is Dow theory? I don't actually.
it's an investment theory. Uh,
Okay,
so
interesting. I'm gonna check that out.
yeah, um, I think that, there are mutual funds and hedge funds and a lot of people that want to trade transports and buy and own
Mm,
transports, and they also want to, time the cycle and so
mm,
having good product, as it were, in the form of public equity
mm,
is important. And I think, we had a great story and we did a great job, but we were just probably not big enough to
mm.
be on people's radar as much as we would have liked.
Yeah, very interesting. Technology has been such a big part of the Echo origin, has been, been a part of the DNA. And I know that you're, um, personally like interested and excited about everything that is happening with AI. And I'm curious to hear from your perspective as someone who's been in the industry for such a long time and is also, leading one of the most important businesses. Like, what are you really excited about with some of these latest developments in technology, especially around AI, and what do you think the sort of the risks are that need to be managed, and what are the opportunities that it creates?
Yeah, and I'm super excited about AI. I think, it's going to transform, our business, our industry, really all businesses eventually.
Yeah.
Um, much like the internet did, right? Much like cell phones did. I mean, there's just you can look back in time and there were these moments where there was a step, transformation, and I think AI is it. Look, we have dozens of use cases we've identified in our company. Um, I'm going to quote my CIO, who Zach Jecklin. He says AI is a task killer and it's a role killer. It's not necessarily a job killer.
Mhm.
So to your question about risk, I think um, the risk is, as you identify use cases where you can automate, you got to really think through, okay, how are we going to get an ROI out of that? And I'll give you a real world example. One of our use cases that we've identified, and I won't go into the details, but it happens at Echo. 600,000 times a month.
Mhm.
So divide that by 20 working days. That's 30,000 times a day. And let's say it takes 3 minutes per task. So that's 90,000 minutes per day. We're doing this. And it can be automated with AI very quickly. And we're working on it. That 90,000 minutes, if you divide it by 60 minutes an hour, it's 1,500 hours a day of work.
Mm.
So if that 1,500 hours a day is work that's occurring in a centralized group,
Mm.
there's headcount that can come out, right? Because you don't.
Mhm.
But if that 1,500 hours a day is dispersed across 1,500 people, which it
Mm.
is, we're basically freeing up 1 hour per day per person.
Mm.
So that's not necessarily going to eliminate their job, but it's going to give
Mm.
them an hour more of capacity. So, strategically, we
Mm.
think about, well, how can we use that hour? How can we make them more productive?
Mm.
How can we allow them and enable them to sell more and get more leverage out of that? Um, and so that's one of the challenges. Like
Yeah.
it's pretty easy to automate things, but the question is, what are you going to do with it and how does it benefit the company? We don't want to automate things just to make our employees' life better, although that's nice. But how does the company get value for that?
Mm. Yeah, and it's interesting, especially in that circumstance where it's an hour a day. I mean, we see this all the time where um, it is quite rare that you are automating an entire function where it's like, okay, we just don't need those individuals. Most people are doing a bunch of things and it's some amount of time savings. And it also requires a lot of structure around like operations and targets to make sure that you see the productivity improvement because from that time because given an hour of time back, it's very easy for all of us to just kind of slow down and like, not really use that time necessarily productively. Have you guys learned anything about how to make sure that in those scenarios where you're not you're sort of saving 10-20%, still huge impact to make that you actually get to translate that through to sort of ultimate business impact?
Well, I would say we're learning as we go. One of
Yeah.
the first things we learned, I think we learned it with Boom actually, um, that you when you first implement automation, you tend to make it optional, right? And
Mm.
people don't typically opt to use it if they're unfamiliar with it or they're uncomfortable with it. They people are people. They want to do things the way they've always done it because that's what they're comfortable with. So there's the first challenge is actually adoption. How do you get people to use the tool
Hmm.
and show them that it's good for them and it's going to make their life better and it's going to make them better for their customers. So
Mm.
that's challenge number one. And then challenge number two is, you know, if you free up capacity, how do you make use of that capacity? And that's where you just have to have metrics in place
Yeah.
where you're measuring what people are doing and creating the proper incentives for them to want to do more.
Yeah. Yeah. Doug, I could keep going for a long time, and we are coming up on time here. I know that you're a busy man. I'm very grateful for the time that you've spent with me. Um, Thank you so much for this conversation. Really, really enjoyed the opportunity to get to learn more about your kind of story and Echo's story. And you guys are doing really, really big things. It's really cool to see.
Well, thanks for having me, Jesse. I appreciate it.
Awesome, Doug.